Hey guys, welcome back to the Richard Fernando Investing channel. First of all, I'd just like to say a huge thank you to everyone, absolutely everyone who has joined the community, who has pressed the subscribe button, who has commented, especially on that Neo video. It seemed like we got a lot of traction there, which really shocked me, and it was a beautiful surprise really to wake up and see that many comments and a lot of interaction amongst you guys and amongst subscribers themselves. That's exactly what I hoped for with this channel when I first started it, and so to see that already coming to fruition is absolutely wonderful. I'd love comments on what kind of content you prefer, because honestly that's what I'm here to do. I'm here to provide information and videos that ideally meet what you guys are expecting or what you guys hope to be watching. But without further ado, this video is geared towards my actual investment process in terms of how do I find a new stock. So I've been I wouldn't say lucky, I've been, I guess, in a good position in terms of finding stocks in the past couple years that have delivered above average returns compared to the general market. And I'm not going to sit here and say that I am in any way more intelligent than, say, a fund manager, for example. There's a lot of nuances and differences in terms of just the sheer amount of money that they're having to invest, and there's so much more to it, and I'm not trying to claim that I'm the perfect investor either. I also make mistakes. I also have positions that are negative right now, or I've closed a position or two in the past that unfortunately didn't go as planned, and there's plenty of other YouTubers that are in the same boat. But I'm here today openly saying that I will own up to those, the positions that I haven't had great success in, because I know a lot of YouTubers out there seem to just gloss over anything that doesn't go viral or 100% in a week, that sort of thing. So being very realistic and upfront with you guys, I think, is very important, being transparent. But I'm hoping to make this video just so anyone out there who perhaps doesn't have a set kind of formula, not that there is a specific formula, but some sort of an idea of where to start, because it can be daunting. If you're new, especially, to investing, you walk into this world and there's people talking about so many different aspects, and the more time you spend in the actual stock market and in that world and in that kind of consumption of media in general regarding stocks and the markets, is when you start to kind of get a grasp of where all these comments that you once saw actually fit in. So there's so much from macro issues to issues specific to companies. You get taught general things such as diversification, people talk about options. I could honestly throw out so many different terms from different sectors and different, I guess, fields of finance. I mean, you could buy a corporate finance textbook like the one that I use for my studies, but generally I think a lot of the viewers out there that may not have as much time in the market as me, or are just looking to have a fresh perspective from someone younger than them, because I've noticed a lot of our viewers are over the age of 30, then yeah, this is for you. And without any more preamble, I'd just like to start by saying that none of this is financial advice, but it's more so a tip as to how I go about trying to find a stock that could potentially have a good near to long-term future, or short-term for that matter. And the first thing that I do to find the stock, because that's the thing, you could spend every day just going through Yahoo Finance, which I do suggest, by the way. I've got it open. I do suggest that once you actually have a few stocks that you're looking at. They also have a trending section, which is one of the ways that I'd suggest. So trending sections, stock twits as well, and any kind of social media is really important in my opinion too, whether it's Facebook groups, whether it's just general messenger chats filled with other investors, which you can find just by searching for them, or Discord chats. Discord chats is a lot more than I expected. That's a world that I'm very new to, but it's been very helpful to me anyways, because you find people through these forums and through these media channels and Discord and whatnot, that after you get through all the ones that are just trying to pump and dump, which is something you should definitely look into, there are people out there that will try and take advantage of you. And I think it is a learned skill to work out who they are. Usually the rocket emojis are a bit of a giveaway. But you can meet people like I have in the recent past online, who will happily talk you through their rationale and their thinking. And that's the main aim, really. That's the main aim. When you're trying to find a new stock that you're interested in, that you want to see has the potential to grow and is worth putting your hard-earned money in, because that's the thing, it's a big decision to put your hard-earned money into a stock, then one of the first things you need to do is be able to build a narrative in your head. Okay, if things are optimistic in the market, if economic conditions are favorable, what could this stock do? If economic conditions are average, would this stock still be able to outperform? If conditions aren't ideal, such as what we have been seeing coming out of the pandemic, can this stock stay afloat, which is a huge issue as well. Those are questions that you've got to ask yourself, and you've always got to be critical in every step. So following on from that, you've got to be able to ask yourself as well, does this company, if you're looking for growth mainly, does this company have that it factor, which is something that you can't really quantify, you can't really, I guess, explain it in a black and white manner. But there's got to be something about the company, whether it is something quantifiable or not, there's got to be something about the company that you see as worth sharing with your mates, for example. If your friend came up to you and said, wait, why would you consider investing in this? You've got to be able to build that thesis yourself. You've got to be able to go, I think that it will grow more than the market or more than its competitors because it has this particular strength or this particular collection of things that differentiates it. So you've got to be able to find that. You've got to be able to look through. And so the process for that is definitely one, social trends for me is very important. I think as a young investor, there's many worse things you can do than at least try and get yourself into that world. Whether it's YouTube, whether it's subscribing to YouTube channels, whether it is social media in terms of stock twits, whether it's Facebook, whether it's Twitter, whether it's watching Yahoo Finance live, which, I mean, each to their own on each specific social media platform. Some aren't great, some can be full of pump and dumpers, but it's always good to be in that environment, in my personal opinion, because you can get a feel for what other people are trying to seek in terms of value and how they describe a specific stock and what potential they see. I'm not saying to look at social media and say, oh, this person thinks it's going to 10x next week, it's going to. I actually advise the opposite. I advise to be super, super critical, not only in people's opinions that you're reading, but even more so in the numbers they're throwing out. Because sometimes there are people that are willing to lie through their teeth just to offload some bag holding stocks that they've got. But I think it's a great idea. It's still a great idea to go in with a critical mindset, but try and understand the narrative for a particular stock. So social media is my first general tip. The second is reports. So once you kind of see companies pop up on your radar, you build a watch list in Yahoo Finance, you use your brokerage company's app, and from there you can kind of see a trending page that other people are watching, which is really important to me as well, because I can see the general trend, and it's a lot about spotting trends in terms of other investors. It's just as much about understanding, I guess, the method of operation of other investors and your peers, as also trying to understand the company itself and the growth path it has. From there, of course, traditional media helps, but step two is definitely the reports of the company. So there is no better way to get a grasp and to fully understand a company's business model. At times, I'll be honest, you might not be able to fully understand it to an 100% extent. For example, with NEO, I have spent so much time trying to understand every facet, from battery swapping to the expansion globally, to its recent run up in terms of delivery numbers, to its recovery from the pandemic, all that sort of stuff. But there is still a thing or two that can pop up over time that you might need to spend a bit more, I guess, resources and time to try and understand. For me, in this particular case, in this example, it would be the Hycan sub-brand or sub-make that they've made with Jack Motors. So I understand that relationship, that strategic relationship with Jack Motors is crucial, but I am still, I guess, trying to reason with myself as to why that sub-make is going to be a difference maker. So in that sense, it's a never-ending process, but it's an enjoyable one when you can find a little a pearl of wisdom along the way. But following on from that, yes, the reports. So if you look into the reports of a company, it is probably the best way, especially the investor presentation, to find what the company thinks they're going to be doing. So not getting secondhand information or anything like that. You're getting firsthand from the company info on where they think the company is headed. So that is bread and butter. You really need to be able to learn that once you see a company or a stock taking off, whether it's trending, whatever, to have that restraint and to be able to go, no, I need to research this myself. So there's so much you can do in this scenario. You can go through the company's financial numbers, their reports. You can try and learn to understand the numbers, the revenue, and how it works in that sector. It's not advisable, in my opinion, to just compare, for example, on a very simplistic level, the PE ratio of a big bank, a major bank, which would have a PE ratio of around 10, and a growth company, startup electric vehicle company, if that makes sense. So it's also having your own discretion in that regard, because people will tell you those basics early on, such as the PE ratio is the most important thing, and that's very simplistic. There's so much more nuance, there's so much more variables to everything. You've got to be able to understand that everything is relative in the stock market. So it's relative to stock investor sentiment, as well as each individual industry has its own paradigm that you need to hopefully understand with time, and understand the competitors and understand the moat. What makes this company different? Why would you invest in this company as opposed to its competitor? And I'll be honest, at times it is easier and just as efficient to take a position in two companies in the same field or in the same industry if you can see that that whole industry is going to succeed in the near future. You've got to be able to look, I guess, with a bird's eye view as to where the money's flowing, where the growth is going to come in the next few years. And it's not easy, but I think the more that you keep a tab on their own projections for their growth through the investor presentations, and again, doing your own deep dive in terms of news, in terms of building a narrative yourself, and you combine that with social trends and social media, I think that that's a really promising strategy going forward. Now, that's my other point here, which is basically you've got to understand the difference and the nuances, again, between growth companies, dividend companies, value investing, and even things that have gone from pre-IPO to IPO. There is so much more that you can, I guess, ascertain in terms of the differences if you decide to go down that route and really look into it, follow it. And so the final third tip is to create a watch list in Yahoo Finance, to create a watch list in StockTwits, to create a watch list everywhere you can, basically, to keep tabs of all that information. If you find an opportunity, if you come across a company that you think is interesting, that could grow, there's nothing worse in my opinion than blindly just following the crowd. People get burnt that way. That's how shorts make their money. That's how you lose everything. That's how you blow up your account, especially if you're using leverage, all that sort of stuff. Whereas my strongest suggestion, my third big suggestion, is definitely do your best to follow companies for an extended period of time. If that particular, I guess, growth or that defining moment for a particular company, say with Neo, the delivery number update is really important, or has been for this past month. If whatever info, whatever pot of gold you think you've found is time limited, then you can't really do this. But if it isn't, there is no issue with slowly averaging into a stock. There is no issue with following it for an extended period of time and having no position. That's the most important thing I can share. I myself have made that mistake, and I've also benefited from it. So from understanding that, hey, I'm better off giving it a miss, giving it a wait, giving it a little holding period, just to be able to fully wrap my head around what I'm doing here. Because at the end of the day, it's your own capital at risk. Never invest more than you can afford to lose, but at the same time, you've got to keep your head and level, basically, when you start to put your money in too. So it's not just about, this is how much I'm going to put in, so I'm safe now. I guess I've acted rationally because I'm not putting more than I can afford to lose into the company. You've also got to be smart with how you use that money, because you don't want to spend years of your time over your whole lifetime studying stocks and whatnot, but also making rash decisions that kind of set you back from all your hard work. So for me, the one thing that's definitely helped me grow my portfolio, I believe it's doubled in the past few months in terms of portfolio size, which has completely exceeded any expectations I would have had. It's definitely been knowing that at times it is best to just wait. Just wait, even if you think that the market's going to triple tomorrow because someone told you so. Always wait until you fully understand what's going on. And thinking outside the box. If someone had told me a couple years ago, 2-3 years ago, that I shouldn't invest in AMD because Intel is always going to be number one, and I took that advice, I wouldn't have made, for example, a triple figure gain on that stock. So you've also got to be able to tread your own path, not just follow what I say, not just follow what another YouTuber says, or what your best mate who had one particular stock gain off the charts once, whatever he says. You've got to be able to form your own path and be able to put together, I guess, all the different bits of advice I'm giving you, but whatever you learn along the way. At the end of the day, having time in the market and learning and understanding all the differences and all the little specifics that you hear here and there and that you read here and there is what's going to really differentiate you and put you ahead of the pack. Always kind of stick to your guns and make sure that you're being responsible with your actual wealth management side of things. Of course, I don't recommend putting 100% of your money in a stock, for example. But at the same time, that's my main advice. To keep an open mind and to hopefully be able to become a better investor within yourself before you just pick and choose to follow one exact specific person and whatever they're trying to tell you. But at the same time, I hope any of this has helped you. If anything is unclear, be sure to comment. And again, thank you for all the unbelievable support on this channel. It has really blown my mind. I never expected it to come, and especially so quickly. But thank you again, and I hope you have a fantastic day.